Hi everyone, my name is Danny Arrington with the Business Credit Desk, and we really appreciate you taking a few minutes to go through our presentation on the 12 reasons having business credit is a must for every successful company and how not having it can be disastrous for your business. Let's jump right in. So what is business credit? Well, business credit is credit in a business name that's linked to the business's EIN number. This is credit that a business owner can obtain that is not linked to their social security number. And when built correctly, the social security number isn't even supplied on the application, meaning there is no personal credit check to obtain this kind of credit because you're using your EIN number. Now let's quickly draw out the differences between applying for consumer credit versus business credit. When you apply for something such as an auto loan, the lending institution pulls your personal credit using your name, address, and social security number. This information is sent to the consumer reporting agencies. They supply the lender a credit report with all the information relating to the person, a person with a similar name, address, and social security number. And with this type of credit, an inquiry is put on the consumer credit report, and your report, of course, is used to make a lending decision. Now, once you have obtained credit through that transaction, that credit is then going to be reported to the consumer reporting agencies over time. But when you apply for something such as a business loan, the lending institution pulls your business credit using your name, address, and EIN number. This information is sent to the business credit reporting agencies, and they supply that lender with your business credit report with all the information that they have relating to a business with a similar name, address, and EIN number. With this type of business credit, or with this type of credit inquiry, an inquiry is put on your business credit report, and your business report is then used to make that lending decision. And of course, the credit that results from that transaction will then be reported back to that business reporting credit agency. Now, it's important to note that when you're applying for financing and credit using your business credit, you should not supply your social security number on the application, even though it's going to be requested. When you do this, no personal credit can be pulled because the lender can't pull your social security number without permission. So this forces them to only pull your EIN number as that's all you've supplied on the application, not your social security number. This means you're going to be approved only on the merits of your business credit report. Your personal report isn't even reviewed when you leave it off of the application. So now that you know what business credit is, let's examine what benefits having business credit truly provide. Business credit has no direct affiliation to personal credit, and thus business credit has no impact on the business owner's personal credit score. Business credit has no impact on the business owner's personal credit score, because when you do this properly, business credit is obtained without the social security number being supplied on the application, which means that there is no credit check from the business owner to get approved. And that also means that anyone who has bad or even really, really bad, horrible personal credit can still get approved for business credit. Business credit reports to the business credit reporting agencies, not the consumer reporting agencies. As business credit is used, it has no adverse impact on the owner's consumer credit because it's not reported to the consumer agencies. What this means is that utilizing the account, even when you cross over that 30% threshold, we all know that when you're utilizing personal credit that you attain through your social security number, if you go over 30% utilization, it's going to hurt your credit scores very badly. But when you're applying for business credit, not using your social security number, and you're getting approved for business lines of credit, you can go over that 30% number and it's not going to have any impact on your personal scores. In addition to that, there are no inquiries on your personal credit when you apply for business credit, as long as you're not supplying the social security number. Now, 10% of your total consumer credit score is based on inquiries. Remember that 10% of your total score is based on inquiries. So if you're using your personal credit to apply for business loans and credit, your scores will go down as a result of those inquiries. I have seen nightmare story after nightmare story where a business owner goes and applies for a business loan like everybody else and uses his social security number on the application, and the next thing you know, his 750 credit score is now a 450 because he's got 500 inquiries on his credit. And also, those credit inquiries can remain on your credit for a long time, affecting your ability to borrow more money. Some unsecured business lending sources won't even lend you money if you have more than 2 inquiries on your personal credit report in the last 6 months. So 30% of your total consumer credit score is based on utilization. Remember, we said that 10% of your total consumer credit score was based on inquiries. 30% is based on utilization. So if you use your personal credit to get credit cards for your business, if you use those cards, if you go over 30%, guess what? Your scores are going to go down as a result. So let's say you have a $1,000 limit that you got using your personal credit, or rather your social security number. The second that balance goes over $300, and let's face it, a lot of times business owners have to max out and then pay off and max out revolving lines. So your credit score is going to take a beating when you use your social security number to acquire them. So think about that. That means overall that 40% of your total score is being damaged just by applying and using the credit you obtain using your consumer scores or your social security number. With true business credit, guess what? 0% of your score is affected, because those, not only do they not inquire on your social security number, they are not reporting back to your social security number, so your utilization is not affecting your score, the inquiries are not affecting your score, and you get to maintain a very high personal credit score. Now, business credit scoring doesn't work like consumer credit scoring. Business credit scores are based only on whether the business pays its bills on time. And as a result of that, a business owner can build their business credit much faster than if you compare that to trying to build your personal credit profile. Personal credit scoring systems are very complex, they're sensitive, they're easy for a consumer to mess up, and they're very, very frustrating. Nobody really knows the exact algorithms to the 3 major credit bureau scoring models. But personal credit scores are basically made up of payment history, utilization, length of credit history, accumulation of new credit, and then your credit mix. But please note, this is not how business credit works. One of the most well-known business credit reporting agencies out there is Dun & Bradstreet. The score that is generated through the Dun & Bradstreet system is called the Paydex score. Your Paydex score is based almost entirely on your payment history. If you pay all of your reporting trade lines on time or early every single month, you're going to have a very high Paydex score, with 100 being the highest. Of course, if you pay everything 120 days beyond terms with everyone, you're probably going to have a very, very low credit score, and people aren't going to be willing to give you much business credit. So a quick recap. Consumer credit scores are made up of 5 factors, and they take a long time and well-disciplined borrowing and management to get really good credit scores. Business credit scores are mostly based on payment history, so as long as you pay your bills as agreed, you're going to have an excellent score. And it only takes 2 to 3 reported accounts for you to establish a score, and most vendors have your account reporting to the business credit reporting agencies within 30 to 90 days. This means you can build a business credit profile and have an excellent credit score in a very, very short period of time. Now, did you know that anyone can request to see your business credit reports? With consumer credit, someone has to have permissible purpose to pull your credit score. Basically, they've got to have your consent. And you think about auto dealers, banks, mortgage shops, and others that are licensed to lend money. Those are the types of people that you would typically give permission to review your credit. And no one can look at your credit unless they have that permissible purpose. But with business credit, this information is made public, which means anyone who wants your business information can easily and cheaply get a hold of it. So think about some of the people who can see your business credit report right now. Think about what they're seeing when they look at it. Customers, clients, suppliers, others who you might want to be in business with, competitors, right? So here's some of the information that they can see when they go and look. All right, they can see the number of trade lines you have, payment experiences, credit scores, high credit limits, past payment performance, how many employees do you have, revenues. They can see almost anything about your business, and that stuff's available to nearly anyone who wants it and will take the time to go look for it. Now, during our business consultations with our clients, we always pull business credit because we want you to see how creditors, banks, customers competitors. We want you to see how other people see you from a credit perspective. And I always ask this question, it's probably a little unfair, but I always say, would you want to do business with a company with a similar business credit profile? What does your profile say about you? Are you established? How will your customers, clients, even competitors think about you if they have access to that information, which they do? And we strongly encourage all of our clients to not only, focus on business credit, but to monitor it. Formally monitor your business credit on a regular basis to see what others are seeing about you. And you need to keep building your business credit so that you can have a credible image portrayed for anyone who wants to see your credit in the future, especially those who lend money or issue credit on terms. Now, the discussion of reducing risks in a business, those discussions rarely touch on how the owner acquires debt or secures their growth capital. But you know what, it should, because there is a ton of risk associated with putting your social security number on an application for credit or a credit line or a credit card for your company. When you do that, you're almost always providing a personal guarantee. That means that you're personally liable for your business debts. So if you were to default on one of those obligations, the creditor will pursue your business assets first, yes, but guess what? Then they're going to come after your home, your cars, your stocks, your bonds, your bank accounts, and anything else. And at the very least, they can absolutely decimate your personal credit, making it impossible for you to continue to operate or just move on from that business and have a good personal credit score. And no business owner expects to fail, but you know what? Unfortunately, 90% of them do, and it makes no sense to put you and your family's financial future in jeopardy when you know going in that you have a very high chance of that venture going under. And remember, many times the reasons a business might fail have nothing to do with you or anything that's within your control. Such as shifts in the economy. So all we're saying is don't risk it all. Don't combine your personal and your business if you do not have to. Now, there is no question that starting and running a business is risky. You knew those risks when you opened it. And this is why most conventional banks make it so hard for a business owner to go in there and get a loan. So don't use a personal guarantee unless you have to. There'll be times where you do need to, but with credit, store credit, cash credit, vendor credit, you absolutely don't need to as long as you've built your business credit properly. Now think about it this way. Have you ever thought about selling your business? What about buying someone else's business? Let's talk about the value of business credit when it comes to selling your business. Anyone who has sold or bought a business will tell you the importance of business credit. And now that you know how easy it is to get a hold of extensive credit and financial information on another company, if you were a buyer, wouldn't you get that information? Wouldn't you want to see it? And would you buy this company that you're looking at based on the information that you see on their business credit report? Is the company established? Do they pay their bills on time? Do they look like a successful company? Think about it this way. If you could choose from two companies to buy that were the same in every way except business credit being the only difference, which one would you buy? The one with a very limited or no credit profile or business credit profile at all, or one with a very solid credit profile that reflected good payment performance, a lot of available credit, open to buy limits, and so forth. What we're saying is business credit is essential in getting a good evaluation of a business. Almost every single time a business owner applies for financing or credit, their business credit is being reviewed. And not having business credit established will get an owner declined for financing. But there is no Fair Credit Reporting Act in the business world that requires those who review your credit to notify you that they did or that it was used in their lending decision. So even though it's always reviewed almost every single time, you're not going to know that it was reviewed because there's no law that forces them to notify you of that. Another benefit of business credit is that it more than doubles your borrowing ability. You've always had consumer credit. Now you can have a whole nother credit profile with your business EIN as well. This means it's the only way for you to get like multiple Staples cards, a handful of Office Depot cards, Lowe's cards, Walmart, and many others. So when you have access to more store and cash credit cards, you just got a lot more, access to a lot more usable money to grow your business. Plus, per the Small Business Administration, business credit limits are 10 to 100 times that of consumer limits. Obtaining business credit radically increases your available credit as a result. An average Staples card may cap out around $3,000, but in the business world, that same Staples card would be closer to $30,000. Look, businesses have a need for higher credit limits, and higher credit limits they get when they've established their business credit properly. And this is another reason it's very hard to scale a business using only personal credit, because you simply don't have the borrowing ability when you're qualifying using your Social Security number. Many business owners associate the time frame to build business credit with the time frame to build personal credit. And, that's a big mistake, because business credit can be obtained very, very fast. You can get approved for initial vendor credit to help your business grow within a week of beginning the pursuit. That credit will typically grow, start reporting to the business credit reporting agencies within 30 to 90 days. And once those credit lines are reported as trade lines, that will in turn give you an established business credit profile and score. And once your business credit profile is established in 90 days or less, that's when you can start getting real usable revolving store credit cards and credit lines. And then from there, over the next 120 to 180 days, you start finding yourself getting easily qualified for Visa, MasterCard, Discover, American Express. We're talking about very, very low, in most cases, 0% introductory rate cards. At this point, creditors are competing for your business, and they're giving you their top shelf offers in order to get you to go with their lines. And that's where everyone wants to be. Now, one of my favorite types of businesses to help with business credit is startups. Business credit is absolutely perfect for startup companies. Most conventional and private lenders are not going to lend to startups. You got to be in business for at least 2 years or more. And the more popular cash flow type financing options out there, though, even those require 1 year in business, steady deposits into the bank. And for startups, that's certainly just not possible. And most of your consumer credit card companies are going to require that you prove your personal income. And well, that's kind of hard for a startup company, right? But with business credit, even a startup can get loads of new credit without having any of those things checked. Now, many businesses have no ability to provide financials. Again, think about a company that's just started and maybe they've been in business for a year, but they haven't really put a whole lot of money in the books. Well, business credit is an absolute option for businesses who don't have, or many just simply don't want to show their true revenue. Business credit is perfect in those situations. And let's face it, we all are looking for ways to reduce our taxable income, so we don't always report or show how much money we're actually making. This leaves a smaller net profit showing on the books, which is what most lenders and investors are going to look at. And that can be a problem. But guess what? Business credit doesn't look at financials. They don't look at bank statements. A business with even no cash flow can be approved for a high limit credit card, helping them to grow their cash flow. And tax returns aren't looked at either. So even if a business shows a loss, they can still be approved for business credit, in many cases, very, very high lines of credit at very, very low rates. Now, most business lenders require collateral. But what if you don't have any collateral? Or what if you just don't want to pledge your single family primary residence to get that SBA loan? Well, the reason that most business lenders require collateral is because most businesses fail, and the risk of repayment lent money is pretty high. And this is why most conventional lenders make it so hard to get money. They aren't set up for this type of risk. This is why the SBA requires that you pledge all your business assets, even your personal assets, in many cases, even your homes and your rental properties if you have them. Business credit is one of the only ways to get money without providing collateral to offset those risks. Now having a strong business credit profile that gives you access to lots of high limit cash and store credit gives you a huge competitive advantage in the market. 90% of the general population, I think it's probably closer to 99% of the business owner population, knows literally nothing about business credit. But now that you do, you have a huge competitive advantage. It's much easier to grow a business with access to credit. And you can test things like advertising, a new product line. You can do things and take some risks in your business when you're not having to pull all of that capital out of your cash flow to run those tests. When you can put that stuff on low rate, long-term revolving lines of credit, it just makes sense that you're going to have a competitive advantage. Look, not knowing how to build business credit is a good excuse for not having business credit, right? But once you know how to build business credit, steps must be taken to build the company's credit profile. And just like a consumer with bad credit often doesn't rebuild their credit as they should until they absolutely have to, they need a car or a house, no business can succeed long term without building their credit. Plus, it's much easier to grow with credit than without credit. So let me show you a brief outline on how to build business credit, how the process works when it's done properly. The first step is to get approved for vendor credit. A business credit report can be started much the same way as a consumer credit report commonly is, starting with smaller trade lines, smaller vendor accounts first. The business can be approved for small credit cards to help them build an initial credit profile. These types of initial cards in the business world are commonly referred to as vendor credit. The most common payment terms when you first start this process are called net 30 terms. This means that they'll give you credit on net 30 terms, giving you 30 days to pay the bill, and at that point you owe that money in its entirety. Some companies will require that you buy their products. Others won't care that you buy their products. They'll just report that you opened up a trade line with them. Some companies will have you pay for your first couple of orders before they'll report. Others won't. Okay. Some companies will report to your credit immediately. Others might take 30 to 60 days to report. Some even take up to 90 days. Look out for all of these nuances when you're applying with vendors. And the nice thing about our system is that we already know who is reporting immediately, who's going to require that you buy their stuff, who doesn't. And some of the most popular sources for those early stage trade lines are companies like Uline, Laughlin and Associates, Quill, Office Supplies, Reliable, and many, many, many others. Okay, you're going to need about 5 total payment experiences in that first round before you start moving to the revolving store credit tier. All we're saying here is don't skip steps. Don't go applying for Apple credit or Dell credit if you don't even have a single trade line or a single payment experience reported. You're going to get denied if you try to skip the steps. The next step is to get approved for revolving credit. And most major retailers do offer revolving business credit. And to get approved, they'll want to see that you do have some kind of an established payment experience and history, an established credit profile with at least 1, preferably 2 reporting agencies, meaning you don't just have one account that's reporting to Paydex. Maybe they want to see one that's that you have at least one account reporting to Paydex and at least one account reported to Experian or Equifax. Some starter revolving accounts out there will include well-known stores like Lowe's, Home Depot, Staples, Office Depot, and a ton of others. And most major stores out there do offer business credit, even though they don't go out there promoting it. So once you follow the steps that we're outlining, you can start getting credit with major retailers like BP, Chevron, Walmart, Target, more stores like Amazon, Best Buy, Nordstrom, Sam's Club, Costco. All these people offer business credit lines and many, many, many more. Look, the problem is that most business owners wait until they have a need. Right? They wait until they absolutely need something, and then they walk into one of these establishments thinking, hey, I'm going to apply for a business line or a business credit line right there on the spot. That's never a good idea. And it's always going to result in either you getting turned down, or they'll say, okay, yeah, thanks for the application, but now we need you to give us your social security number because your business credit is not strong enough to get approved for these stores. We prefer to follow a process here. Okay, and we prefer that you know that process down to a science. We know before we apply that we meet a particular vendor or lender or store's requirements, and we know that we're going to get approved before we even begin. But once you have all those accounts moving, okay, you're going to need to have about 10 payment experiences. Then you can start getting approved for cash credit sources. And we say cash credit sources, we're talking about Visa, MasterCard, American Express, Discover, issued for major banks in your EIN's name. It's also recommended that you get at least one account from one of those store lines that has a $10,000 limit. And the reason that we make that suggestion, it's not mandatory, but the reason we make that we suggest that it's going to throw your high limit approvals through your cash credit sources through the roof. So if you don't have that and you start getting approved for Visas, MasterCard, Amex, and Discover accounts, don't be surprised when you don't get lines over $10,000. But if you get a store line or a vendor line with a $10,000 high credit limit, you're going to see much larger approvals from the cash credit sources. Okay, so just a little tip there. Now, you can contact us if you do have good personal credit or a business partner that has, and you want to quickly move into having high limit unsecured business lines of credit. There is a shortcut for you there, and we're happy to talk to you about that offline. Hey, we really hope you enjoyed this presentation on the 12 reasons having business credit is a must for every successful company. We invite you to our website or to one of our YouTube channels and watch some of our other content on topics like repairing business credit, qualifying for SBA financing, starting a Paydex report, and dozens of other excellent titles. We look forward to connecting with you and serving you. From everybody here at the Business Credit Desk, we really appreciate your time today. Have a nice day.